Welcome to Dale's Dominion podcast, where we discuss Virginia real estate and beyond. Here's your host, Dale Shoop.
Welcome to Dale's Dominion, Virginia real estate and beyond, where we dive deep into the world of real estate, title insurance, mortgages, and if that gets a little boring, we might have time to talk about money and motivation, cars and coffee, or maybe even burgers and bourbon. I'm your host, Dale Shoop, and today I have two special guests, both authors and mortgage guys. Carl Garrett is with Movement Mortgage in Charlottesville, Virginia, and he's such an old friend, neither of us can remember how we met. He's also a baker and an author, and he even brought pretzels to one of our homemade pretzels to one of our first closings.
You remember more about me than I do.
And so Carl has introduced me to Harlan Accola. He calls himself a farm kid from Wisconsin who just happened to find a unique, unusual product that changes lives, including his own. So I want to say welcome, Carl and Harlan, to the show.
Thank you.
Glad to be here. Thank you.
So we'll start with you, Harlan. Can you share a little bit about your personal journey and sort of what led you to become the National Reverse Mortgage Director at Movement Mortgage?
Well, you know, Dale, I had never intended to be here. It's kind of like, you wake up one day and you're doing something completely different than you ever planned on when you were baling hay back on your dad's farm in Wisconsin and milking cows. But I started out in the aerial photography business because I love to fly airplanes and take pictures. But I got into the mortgage business in the 90s, and I had zero interest in reverse mortgages. In fact, I told people that they were a ripoff. They screwed the old people and hurt their kids. Just stay away from them. That was my standard answer. I didn't know anything more than that. And then I was invited to a training session in Miami in January. And if you live in Wisconsin, you go to any training session in Miami in January, even if it's about reverse mortgages. That's the only reason I went. And that meeting back in 2004 changed my life and changed the lives of thousands of my clients and people in our church and our family and myself. I have my own reverse mortgage and realized that it was an integral part of retirement. And so it was a kind of a long journey and had no idea this is where it was going to end up. But I'm just thrilled to be a part of changing other folks' lives and enjoy mine as well because of how it's been better since I understood how reverse mortgages and housing wealth really works.
Okay. So like you mentioned, I think reverse mortgages do carry sort of a misconception in the public eye. How do you address those misconceptions? And what are some of the common myths you encounter?
Yeah, the number one thing is that you lose your house and the evil bank takes away your house. It's kind of like the movie you watch at Christmas time, It's a Wonderful Life. And that evil banker was foreclosing on everybody's house. Yeah. That's kind of the connotation that we have because there were some bad reverse mortgages when it started out because it wasn't government sanctioned or government controlled. And then the Federal Housing Administration under Reagan's term started controlling it and came out with a product called the home equity conversion mortgage in the late 80s. And that was something that I did not understand. And so a lot of people say they're a scam and they're a ripoff. Well, they're a government-controlled scam, which is interesting, a government-regulated scam. But it's simply a very safe way to take money out of your house without losing your house. You don't give up ownership of your house. You always own the house. At Movement Mortgage, I always say we're lenders. We're not landlords. We're not taking people's house away. And then there's a big misconception also that if you die, then your wife gets kicked out of the house. And it was great that you had the reverse mortgage and maybe you had a good time, but after you die, your wife gets kicked out of the house. That is not true, and that's not the way it works unless you purposely did not put your wife on title or did something to create a problem for her. So the issue is that those are the two main things that people think about all the time, is that you're just going to lose your house, or if you don't lose it, your wife will after you're gone. Neither of those things are true, but they're repeated often enough that everybody kind of believes it.
They really are. I think my first experience or even introduction to reverse mortgage, I was working down in Fishersville doing real estate closings, and a couple just walked into my office kind of off the street and said, we want to do that thing where you give your house to the government. And I had no idea what they were talking about. So called a lender friend of mine and said, can you help these guys out? And I think he got them on that path, but you're right that it's just kind of people don't realize what it is. And I know that Movement Mortgage emphasizes the importance of serving clients in the 62 and up age group. So what specific challenges or opportunities do you see in catering to this demographic, especially when it comes to financial planning and home ownership?
Well, the biggest thing is we probably spend more time educating advisors, financial advisors, attorneys, real estate professionals, and of course, our own loan officers and loan officers around the country, because a majority of the professionals don't have the answers. And they're the ones that told people to stay away from them. And so that obviously hurts the case when, well, I talked to my financial advisor and she said it's not a good idea to get a reverse mortgage. And so we spend a lot of our time at Movement working together with financial planning groups, working with real estate groups and professionals that are part of at title companies, at real estate offices, at financial planning offices, or financial planning seminars where NAFA, FPA, some of the groups that get together to let them know what the truth is and how this fits in as a viable part of retirement and should be considered to be used by most people. Just like Social Security, everybody plans on getting Social Security from 62 to 70. Everybody plans on filing for Medicare at 65. Unfortunately, most people don't plan on getting a reverse mortgage at 62, when in reality, most people would be better off if they did. And so that's a very big leap mentally, emotionally, for not only people, but for the advisors. And so long answer to a short question, but it's really important that we get to the advisors because they're usually the ones that poison the well the most for people not getting it.
Okay. So in your view, what are the key considerations people should keep in mind when they're evaluating whether or not a reverse mortgage is the right fit for their situation?
Well, it really starts a long time. You can get a reverse mortgage when you turn 62. In some states, depending upon the product, even at 55. But almost everybody, 90% plus of the market is over 62. And so long before you're 62, you take a look at how am I going to use this investment that I've made? So what's really unusual is when people do an IRA and they start an IRA in their 20s or 30s or whatever, and they start a 401k with their employer, they put money into an annuity or a life insurance policy or whatever, there's always an end date and an understanding that when you get older, you're going to pull money out of that IRA. You're going to pull money out of the Social Security that's been deducted from your check. You're going to pull money out of that annuity. That's just normal and expected. It's not a surprise or something that you find out when you get older that, oh, I can pull money out of my annuity or out of my 401k. You just automatically plan on withdrawing it. In fact, you have to withdraw it at 72 and RMDs, required minimum distributions, and all that sort of thing. In the mortgage business, people like Carl and myself, when we did forward mortgages before we understood reverse mortgages, we did not properly educate our clients when they were in their 20s, 30s, and 40s buying houses. We didn't tell them that when you get older, we're going to refund your payments and you can pull money back out of your house instead of continuing to put it in. And so nobody thinks about that. They just think about putting their money in the house and not taking it out. So we help people. We have been better than any generation ever by teaching people to invest in homes. 80% of people over 62 own a home. And there's over $12 trillion sitting in their homes, just primary residence, just over 62, the largest asset class in the history of any country in the world. So we've done an awesome job of teaching people how to create wealth. We've done a horrible job of telling them how to use it.
Right.
You know, Dale, if you went to your financial advisor and you said, okay, I'm retired now, I'd like some money out of my 401k because I'm going to start drawing from my retirement assets. And if that advisor said, no, Dale, that's not your money. That belongs to your kids. Just keep sending money in. When you die, we'll give it to your kids. You dump that advisor in a hurry. But that's what we do. Just keep paying into your house, paying into your house, paying into your house. In fact, 40% of people over 62 are still paying into their mortgage. And when you die, you give it to your kids. That's what everybody thinks. But when they really think about that wealth that's sitting in their house and say, okay, let's make this part of our overall financial plan. And anybody that's listening to this should look at their advisor as someone who is using this as a component of their wealth, just like they look at their Social Security plan, just like they look at their inheritances they're going to receive, their 401k, their IRAs, whatever they have. They look at how does that work in continuing to live after you retire. And they should also look at the wonderful wealth that they've created in that house, because so few people, in fact, there's a lot of kids nowadays that don't want to buy a house because it's too expensive and it's more expensive than renting. Well, as a farm kid, if I wouldn't have bought that first house in 1981 for under $100,000, I wouldn't have the privilege of living in $1 million house today, because I wouldn't have been able to build that equity all along the way to be able to then get a reverse mortgage and be able to live in that nice house with a zero payment, which I could have never fathomed as a farm kid out in Wisconsin. So it's really, I want to help a lot of people with this and being able to tell them about it, because they just don't understand. And there's something that we call the principle of darkness. And the principle of darkness is when people don't understand something and it's in the dark, it's natural to fear it. You just are scared of it. Everybody's afraid of the dark. Why? It doesn't mean that there's danger in the dark. It just means you don't know it's there. And so when people don't know what a reverse mortgage is, they're afraid of it. And they just say, stay away from it, because it must be a ripoff. They're trying to take my house away.
Right. So you brought up taking the house away, and you brought up leaving something for the kids. So what's your take on the whole part about the kids, about a legacy, and how does a reverse mortgage really, how does it end? How does it affect inheritance? How does it affect what happens at the end?
Dale, that's one of the most important questions, because a lot of people say, well, maybe it sounds okay, but this doesn't end well.
Right.
It might be okay for now, but it's not good at the end. It's actually very good at the end when it's part of an overall financial plan, and it should be, because let's first think about, from a legacy standpoint, what do you want to leave to your children? Well, a lot of people say, I want to leave my house to my kids. What's interesting is, yes, back in farm country where I grew up, you left the house and the farm to the kids so they could continue the business. But that was a business. It wasn't specifically a place to live. Mom and dad would usually build another house in the back 40 or whatever, and the kids got the whole farm. But the vast majority of kids never live in their parents' home. Like 97% plus never live in their parents' home. They sell it within a few months of the funeral. They have no interest in the house. They like the money. If you can sell a house for $500,000 and there's 5 kids, each kid gets $100,000. But here's where people really don't think far enough past that second step. I have 4 sons, and I really love them, and we want to give them a legacy, but I want to give them part of their legacy while I'm alive. So we have reverse mortgage vacations, and because I don't have a mortgage payment, we take our kids, we got a standing offer that if you want to go on a vacation, we'll pay for it as long as you take us with you. You can't go on vacation by yourself. You got to take us along.
Clever.
And so we have frequent vacations. We've done one to Kauai and one to Europe, and we've got one coming up next month to Iceland. And that means that our kids are going to get a smaller inheritance because we're spending some of the money now. Of course, I'm still working, so it's, we can do that. But even if I wasn't, we don't have a mortgage payment, so it's much easier to spend money on other things. We can also help them buy their houses. I'm a firm believer in giving away with a warm hand instead of a cold hand. But if somebody doesn't want to do that, and they don't want to give money away while they're alive, but they want to leave a legacy to their kids way down the road, well, the more money I put into my house, the less money I have to put into investments. So when I die, I will have less equity in my home, but I'll have more money in investments because I never spent the money to pay off my house. So the confusion that people have, if I burn up my equity in my right pocket, then I won't have a legacy for my kids. Well, you're going to have more cash in your left pocket. One gentleman said, I hate losing equity. I said, okay, well then lose cash, because there's something called the cost of living. You got to get money from somewhere. So either you're going to lose cash in your investment portfolio, or you're going to lose equity. And it's not about losing it, it's about spending it for something better. So it has actually been proven with thousands of Monte Carlo simulations that the financial planning world has run, that if you do a reverse mortgage at 62, like I did, even though you don't need it, you will end up with a larger net worth and a greater legacy to give to your children than if you pay your house off and have less money put into investments.
Wow. That's something I bet most people don't know.
No, that's something that's really counterintuitive.
Yeah.
Because they think, well, if I got less to give to my kids, no, you have less equity to give to your kids. You have more cash because you never put all that money. My reverse mortgage is $539,000. if I pay it off or would have paid it off, I'd have $539,000 less in my investments.
Right.
It's math. And so one lady told me that in a speaking thing that I was at, I said, she stopped by our booth and I said, are you coming to our my keynote at 3:00 this afternoon? She said, nope, that's when I'm going to do my emails because I don't believe in reverse mortgages. And I said, well, ma'am, you should come anyhow because do you believe in math? And she said, yes. And I said, well, this is not a faith-based product. It is math. And if you do the numbers, you'll find out that you're better off with a reverse mortgage than without a reverse mortgage. It really comes down to the math of the whole thing. When people look at it from how that actually fits into their spending and their overall plans, they'll find out they're better off if they do a reverse mortgage early rather than not doing it at all or doing it late in life when you're broke and you have to.
Okay. So if someone wants to run those numbers, is that something you can help them with?
We do. We take a look at the scenario at the end. And I really didn't finish your question about the end. And some people are going to think,
Okay.
well, he's avoiding the crash, I think. Well, let's say that I live to be 100. 40 years from now, I will owe almost $3 million on my mortgage. My house today is only worth about $1 million. Will it be worth, as FHA projects, $5 million when I'm 100 years old? Maybe, maybe not. But assuming that it is with normal inflation, 4% inflation over the next 40 years, my house will be worth $5 million. I will owe $3 million. I die. And my kids, who are now in their 60s and 70s themselves, will sell the house and split up the $2 million that's left. But what if that doesn't happen? And what if my house, there's massive deflation, my house is only worth $1 million and I owe $3 million? Well, then it's FHA insured and the difference is forgiven with no tax consequences and the kids owe nothing. They don't get anything other than what I gave them while I was alive and my IRAs and whatever else they inherit, but they can never owe more than the house is worth, nor can I if I move while I'm alive. If that one guarantee was not in place, I would not do a reverse mortgage because nobody can protect the value of houses in the future, ever. And if it's upside down at the end, it's not my problem. It's not my kid's problem. It's not my trust problem. It's insured by FHA, and FHA will pay the difference. But most people are not going to live to 100, and most of the time the house is not going to be upside down. So it's a very good insurance program. Like any insurance program, there's more brought in than what's paid out. And so the bottom line is that I'm protected, my kids are protected, and my estate and my wife is protected. So I can only win. I can't lose.
Okay. I know that Movement Mortgage places a strong emphasis on love and value for people. So how does that philosophy translate into the company's approach to client interactions and financial solutions?
You know, I've told Casey, our founder, I think we need a new T-shirt because a lot of us wear Movement T-shirts. That's kind of a big thing at Movement. I don't have mine on today.
It's kind of unusual for us both to be wearing button-downs, Dale, because it's true. Everybody at Movement usually wears the T-shirts and the hoodies and all that kind of stuff.
Yeah, and they're pretty cool. I've seen them around.
Pretty mellow.
Yeah,
we dressed up for you, Dale, because we knew we're walking into Dale's dominion. So, I joked with Casey that we should have a T-shirt that says we exist to love and value old people because we have things we exist to love and value people. When it comes to old people, joking because I'm an old person, because I have my reverse mortgage, so just using that term loosely, we want them to have a better retirement. We want them to help their kids out. We want them to quit when they want to quit. We want them to be able to be more generous and give to volunteer causes, to the church, to charities, whatever it is. And if we don't teach our older clients how to use the home equity that we've helped them build, they're not going to have the full potential that they could have. So Carl, when he's doing forward mortgages, is teaching people to build wealth, put that money away for the future, and have a place to live. We're teaching them to maintain that place to live, age in place in the home they want to be in, and use some of the money inside the house for their pursuits of helping their children, helping their church, helping their community, whatever they want to do. So by loving and valuing them, they can in turn love and value others because of what they're doing with that money inside the house. Otherwise, you got $1 million house and it's paid off. What can you do with it? Nothing until you die.
Right. So as the landscape of our real estate industry evolves, and it is constantly evolving pretty rapidly now, what trends do you foresee shaping the future of reverse mortgages and financial planning for seniors?
Well, Dale, the statistics are pretty clear that about half of the baby boomers, of which I'm a part of, are hitting the age of 62 with less than $200,000 saved
Hmm.
in assets at their financial advisor. It's impossible to go very far in today's inflationary world with $200,000 in retirement. Either they got to keep working or they've got to look at some other options. And one of the other options is all the wealth they put in their house. We don't find it unusual at all that people have more wealth in their house than they do at their Edward Jones advisor or their local financial planner. And so we believe that when you think about $12 trillion, there's more money in people's houses than there is in IRAs.
Wow.
And this is something we know there's a big, we can talk about the Social Security crisis. We can talk about the healthcare crisis. We can talk about the long-term care crisis. It's going to take a lot of money to get 70 million of us to the end. Unless there's another COVID thing that wipes us all out, we're going to be around for a while. And who's going to pay for us? And we have a lot of wealth in our homes. If we use just some of that 12 trillion, let's say a couple, 3 trillion, to take us through the end of our lives, will that release a lot of reality of problems on society, on our kids and our grandkids? There's no question about it. We built up that wealth. Why would we not factor that into the plan? So this is not just about each individual, but this is about something. Our motto at Movement is we're going to do whatever is necessary to change the way retirement is done in this country. It's not just about doing a few loans here and there. It's about taking all the wealth that Carl and all of the loan officers that have helped people buy houses for years and years to actually use some of that wealth, not only help individual people, but to help the country, help the long-term care crisis, and help the children that are worried about their parents having the best retirement. It's a huge issue, and it's not talked about in Washington. They talk about all kinds of other things. But there isn't anything that's a bigger deal than 70 million people on Social Security, Medicare, and Medicaid all at the same time. There is not a plan for it. We have a plan for it. We're going to help people use their home equity to live the life that they could and should without endangering the wealth of their children.
Okay.
There's something. Sorry, if you don't mind, I'm going to break in here with something else. This is something that you and then I talked about, Harlan, and that is as far as another future trend that I think we both see coming, Dale, is that more and more baby boomers are going to be using a reverse mortgage to help them purchase the house that that they want to take the next step in retirement. You could call it their last house if you want to be grim, or just their retirement house. But that's one of the things that the baby boomers have a lot of, as Harlan said, is a lot of equity in their homes. And more, and it's already, we've already seen the news articles that more and more baby boomers are living in houses that they don't think are ideal for their needs or aren't close enough to their kids or what have you, but they kind of feel trapped because A, they've got a 3% mortgage rate, or B, they're worried about buying another house at the top of the market. And a reverse mortgage kind of solves both of those problems. And I'm going to take a minute and just give a quick example from folks that I just talked to, I think, a week and a half ago. These are clients that I helped purchase a house 2-3 years ago. They're both 68 years old. They're thinking that this house isn't really what they want for their last retirement house. And we talked about, what they can do with it, as far as if they sell it, how much cash they'll have to put down on the new one. And they talked about the price range of homes that seem to have what they want. And unfortunately, even with the large down payment from the sale of their current residence, the house that they want seems to be out of their reach as far as their debt to income ratio, because they're both retired and they've got a good retirement income, but not a great retirement income. And so I just laid it out for them that you ought to talk to Harlan or somebody else about using a reverse mortgage to purchase the next house, because that's going to open up a lot more possibilities for you. And the wife that I spoke to, she was she's found that very interesting. And I think that if she's not spoken to somebody at the reverse team at Movement yet, I think they're going to. So I think that's a pretty exciting development.
Yeah, I should have brought that up earlier, Dale. Reverse mortgage for purchase is a huge issue because a majority of boomers are in the wrong house. They're in a house with, there was just an article that came out in Wall Street Journal yesterday called Boomers Bought Up the Big Homes. Now they're not budging. And it goes through that there's boomers, which there's only two of them, sometimes one if there's a divorce or a spouse died, have more 3-bedroom homes and up than millennials do who have kids. That doesn't make sense. I mean, they're the ones with the big houses. And then this morning, there's another article that my son sent to me. A huge number of homeowners have mortgage rates too good to give up, which is a majority of the boomers. Because we were all refinanced in the lowest rate of our lifetime when we started with double-digit rates in the 80s, and now all of a sudden we got a 3%. Nobody wants to give it up. So you got people that are in too big of houses, not moving because either they have them paid off or they have a cheap interest rate. And we can help those people by, yes, you will still have a mortgage, but it'll be a mortgage with a zero payment. Your payment's not going to go up, it's going to go down. And so you come in and buy a $500,000 house, maybe you put $300,000 down of what you have from your the previous sale. And we come in with the other $200,000 to come up with a $500,000 house that's close to their kids or on the golf course or on the lake or whatever you want for retirement. And you're in a senior house that's all in one level, rather than a house that's got multiple stairs and too many bedrooms and that needs repairs because we've had it for 30, 40 years. And that's what's goofing up the inventory. Kids can't buy houses because the old people like me are squatting in their old houses.
Right.
It's all your fault. All your fault.
It's all your fault, Harlan.
As soon as I sent that out to one of our coworkers. And as soon as I sent it out, he said, "Yep, darn boomers."
Darn boomers.
That's
right on.
it.
Well, I'm grateful for you all's time and expertise on this. I want to acknowledge both of you for the work you do to help families build wealth and then use that wealth. And also for the content you put out in the world. It's interesting to me that you're both authors. I know Harlan's writing is a little more industry specific and Carl's is a little more fascinating in the zombie apocalypse genre.
Yeah, I've written a few scary stories.
I remember when my kids were little when I met Carl, and he said, "Oh, your kids will love this." And I'm glad I read it first before I gave it to them. Yeah.
I'm sure I was saying that facetiously. Here, let me take a minute and show you Harlan's book because it's definitely enlightening. Whoop. That's what it looks like. Home equity and reverse mortgages, the Cinderella of the baby boomer retirement.
And you know the
available on Amazon.
The reason I use the Cinderella story, Dale, is because Cinderella was not invited to the ball. She turned out to be the star of the show, but she was not invited to the ball. Reverse mortgages are not invited to the retirement ball, and we should be. Right. Because we can be the star of the show. We can help out a tremendous amount. And so we really believe that we can create Cinderella stories for a majority of the clients that we deal with if they just give it a chance. I did a radio show last week and a lady called in and said, I was listening to this same radio show 2 months ago. And I thought those reverse mortgages are bad, but I thought I'd check it out anyhow. I just want you to know that I called in, I checked it out, I got my reverse mortgage, my life is better, I'm enjoying life more, I've been giving more to my church. It was a Christian radio show. And she said, people should just check it out before they just check it off. Yeah. And that's really what we try to encourage people to do is just be skeptical. It's okay to be skeptical, ask a bunch of questions, but what if it was the best thing for you or for your parents or for your grandparents or whatever the situation is? We just encourage people to look a little bit further because it could be a Cinderella ending and everybody lives happily ever after. Wow.
Well, thanks so much. So Harlan, if folks want to know how to get in touch with you or want more information about reverse mortgages, what's the best way to find you out there or find your content?
Well, it's really simple. Just go to Harlan, Harlan, Accola, Accola, at movement.com. And some people can't remember my weird spelling name. So just go to reverse request at movement.com and they'll reach me that way as well. And we'll be able to answer any questions. And of course, they can go to, you see Carl's name on the screen too, Carl Garrett at movement.com. Any of us can be of help and throw some ideas out and get you matched up with the right person to talk to.
That sounds good.
You guys, Carl, you can all Google me if you want.
Yeah. So if somebody's like really interested in sort of a zombie apocalypse book, Carl, how would they find your stories?
Oh my gosh. Well, the best thing to do is to go to Amazon.com. I don't believe this. I'm going to destroy my mortgage career by everybody finding my scary novels on Amazon. I wish I'd brought a copy of it. No, there's a shorter story called The Zombie Town Bash. That's if you go to Amazon and you search for The Zombie Town Bash by Carl Garrett, it's a coming of age story with zombies, and I'm not making that up.
Okay, I think it's wonderful that you have multiple pursuits and your passion for writing, and it's incredible. So I appreciate both you guys being on. Any last minute things you want to put out there before we sign off?
Well, the only thing I won't go into a lot of detail about this, but Dale, it really, really is something that people like, I'm 55, and people my age should be talking to somebody, talking to Harlan or talking to somebody on the reverse team now, because I did that and I got the numbers and I found out how it was going to change. It could change my retirement just if I got the reverse mortgage at 62 as soon as I'm able, and how it could change things for me, even though I was going to be working for another 5 years. So that's all I'll say there. Wanted to throw that in because that's important too.
Thanks, Carl.
Well, yeah, there's something called cognitive dissonance. Somebody told me, I was doing a speech in Indiana, I remember, and this lady in the front row said, "Hold on, slow down a little bit. I'm dealing with cognitive dissonance." I thought she had a disease or something. I didn't know what was going on. What's cognitive dissonance? So I looked it up, and she kind of explained it to me, but I looked it up later, and it's just simply something that when something completely disagrees with what you've thought all your life about things, and there's this dissonance that you just can't deal with. So most people, when they deal with cognitive dissonance, immediately dismiss whatever they just heard, and they just put it away, try to explain it away, or shut it down, or forget about it. And if you can just push past that and say, "I'm going to check this out," it's amazing what it can do. You want to do the same thing that I did back in 2004 when I headed to Miami. Of course, I was just going to sit in the beach and thaw out, but just be open-minded and say, how does this work again? Let's take one more look at it. It could just change your life for the better like it did mine. And I just encourage people not to give up on that one thought process.
Well, thanks so much. I appreciate you all's time, and hopefully we can chat again soon.
Here's hoping.
Thank you, Dale.
All right. Thanks, Dale.
Okay.